Warm welcome to the 133rd webinar. This is A.K. Asdani from Smart VERC. Today's topic is most important lesson to be learned in stock market to succeed. Duration would be about 30 to 40 minutes. So here are the contents. Cycle. We must appreciate that all stock market phases pass through various cycles, various valuations, and the perception of investors. And as usual, this will be followed by question and answer session, wherein you can ask your question or you can write in the chat box. So coming to the first topic is the cycles. This is the stock market BSE sensitive index plotted for the last 5 years. And at the beginning, it was something about 32, 33,000. And over a period of time, it went up. And today it is very close to 53,000. As you can see, from July of 2017 to almost March of 2020, the index went up steadily. Of course, there were ups and downs, and there was a major volatility also, as you can see during this period. That is in the beginning of 2018, and in the mid of 2018 also, index was down about 20%, and then came the COVID, and from mid of March, as you can see, there was a sharp decline of almost 40%, and from there on the market went up to about 62,000, and now we are at 53,000. So we have to understand that stock market works in various cycles. During this cycle of 5 years, I have plotted this red line as the median. It may or may not be the exact median, but more or less, yes, it is a median. And the economy was moving up, of course, gradually and bit slowly until the COVID struck. And then you can see the market went down extremely on the downside, and then it recovered very sharply, and rest we know all what happened. So the crux of the slide I'm showing here is that the stock market always works in cycles. As regards the valuations were, I can say, slightly high during the pre-COVID period. That is when the index was about 40,000 to 42,000, January to March 2020. The valuations were slightly high, and then suddenly came the steep downfall, and around 24th of March 2020, the valuations become very attractive, and valuations were very low. When I say valuations, that means with respect to the past year's performance. And now, after a huge upside movement from about 26,000 to 52,000, almost 100% up. At the current levels, the valuations are reasonable. When I say reasonable, that means neither too high nor too low. So this is how the valuations have performed. So at the current juncture, valuations are just okay, neither too high nor too low. Regarding the index movement, from the levels of early March 2020 to the current levels, market has gone up at the rate of 11.06% per annum. So there is nothing great. Yes, if you compare with respect to 26,000 Sensex on 24th of March 2020, then it is up by 100%. But when you compare from 42,000, then it is up by only 23% in absolute terms, And in compound terms, it has grown at the rate of 11.06% per annum, which is pretty low compared to average about 15% gains stock. 15% gains the Sensex has logged during last more than 35 years. So as such, it is nothing like that. The market is very high from the valuations perspective, from the absolute levels perspective. Yes, there is a pure sine wave, but stock markets do not move exactly in this fashion. They move in a very erratic fashion, but over a period of 4 to 5 years, there is one complete business cycle. It does moves in upside and downside. So I have divided this cycle into 4 parts, as you can see with the yellow bars. So there are 4 phases: A, B, C, and D. Oh, what do you think? Which is the most critical phase to learn? Whether it is the A, when I say learn means you understand, you have the understanding that yes, it is a part of the cycle. So A is when the market moves from equilibrium to peak and slightly down. So B is from slightly down to substantially down, and C is the formation of the bottom, and D is upside. So of course the number of participants are pretty low, and probably because of the delay from my side. Nevertheless, we'll go for a poll. So here is the poll. Which is the most critical phase to learn? Now I request you to participate, all of you, because already we are less number of participants. So so as to get the genuine results. Most critical phase to be learned in stock market cycle. Only single choice. In another 5 seconds, we shall close this poll. Okay, thank you very much. 80% of the participants have participated in this poll. And as per the results, 24% say A, this is the most critical phase to learn. 19% have gone with B, 57% with C, and no one with D. Nothing to be learned here because the market is going up and pretty sharply up. So there is hardly anything to learn here. Okay, we shall cover one by one. When the market moves up from equilibrium to the peak, there is hardly anything to be learned. Anything to be learned, I mean to say, the market has moved up and it has slightly corrected also. So most of the new investors, they take entry during this part and they assume that the markets have to go continuously up. There is not much learning here. As far as the part B is concerned, yes, market has already corrected about 10 to 20% from the peak, and now they are into a sharp downfall. Here, even the experienced investors, they also become scary at times. And regarding the new investors, this is the first time they are seeing the fall, and they never anticipated. They thought that the market has to go up and up and up. So this is the most critical phase to learn. Coming to C, at this point of time, already markets are down by about 30 to 40%, and they have become, I can say, they have become habitual to see that the stock markets are going down and they can't do anything. They understand that there is no point in selling at this point of time. And so there is learning has already happened during this B part. What they can do is only to wait for the bottoms and moving up. So when the stock market bottoms, here it takes a U-turn, and then yes, there is a learning. Before U-turn, the stock market fall is very sharp, and then it takes a U-turn, and then from the bottom to the equilibrium, again there is a sharp upside. This goes almost instantaneously. Hardly it gives you any chance to understand, as it happened during the COVID time. So the most important part is the B part. This is the most important part. This is the most critical part, which most of the investors are not able to bear. These losses they never thought of, and moreover, this is a sine wave, so the steepness of this curve is not that steep, which actually happens in our portfolio. And also in Sensex, most of the stocks are large cap. So if there is a fall of about say 15% in Sensex, our portfolios, most of the retail investors' portfolios are down by about 25%, 40%, or even up to the extent of 50%, or more than 50% is also possible. Because during this peak time, a lot of speculation goes, and a lot of investors, they buy into very high valuation speculated stocks, and naturally the fall in those stocks is much more steeper than the indices. And that is the reason why this is the most critical phase. This is the phase where it becomes unbearable, especially for the new investors, to continue to invest. What to continue to invest, rather I should say, even to continue to hold. And if you ask me where we are presently, we are somewhere here. It doesn't mean that the market may continue to fall. What I mean to say is, in a business cycle, we are even at the current juncture, we are above the equilibrium. Our economy is growing pretty strong, and presently we are here. It is possible that this curve, instead of going to such low levels, it may take a U-turn even from here. No one knows, even I don't know. But what I mean to say from here is that be prepared for both sides, and you have to always, so you have to always consider the case. What should be the case scenario? What do you think means, what is the most prominent thing going to happen? So that way you have to prepare your portfolio. More about this we'll share in the upcoming slides. Now, why this is most critical? As I have already declared, I have already covered most of the points. Let me give it in a very structured way. There are many investors who are into a leveraged position at this point of time. So if you are leveraged, then you can very well understand, as the market falls by 10%, your portfolio may fall in multiples. When I say leveraged, suppose your position is leveraged 10 times. So if the Sensex falls by 10%, you are completely wiped off, because your loss will be 10 times. 10 times of 10% means 100%. You are gone. So that is how the leverage works. Leverage works both ways, upside as well as downside. So if you have got a leverage position at this point of time, then definitely I'm very sure you are not into this session. Recency effect. Yes, those investors who have seen a high of this, the peak of this level, and presently if their stock is down by 30%, then they are very much depressed, because they have recently seen, just a couple of months back, they saw their stock price maybe about 600 levels, and today it is 450 levels or 400 levels. First time investors, yes, as we have already covered, first time investors are the most scary kind of investors at this juncture. Wrong perception. Yes, as long as the market was moving up from last almost 2 years, investors thought that this is the way stock market works. Stock market does not work in a linear fashion. stock market always work in cycles. If there is a rise for a reasonably long period, there are going to be corrections, there are going to be deep corrections also. At this point of time, during this phase, you will hear lots of negative news, and even small negative news are converted into huge falls in the stock market, because the mood is depressed, no one is willing to go for long positions. Worldwide, this phenomena is worldwide now, because in 2008 also happened the same thing, and now also happening the same thing. In the present context, interest rates are rising. So what happens when the interest rate rise? Those who have availed loans, I'm talking about the investors who have availed loans, their EMI will rise. And as the EMI rises, they are left with less amount of money to spend and save. And if they are saving less, that means they will be able to invest less into the stock market. Also, there is a steep rise in inflation. And because of high rise in inflation, the amount of money they are consuming every month goes high. And again, there is less money left for saving and investment into stock market. So this is the way. Less amount of money flows into the stock market, and as a result, you know very well, stock market is not a necessity like food. So less money is invested. Already investors are scary. They are not willing to invest even if they have the money. High valuations, yeah, if you, as I said, presently we are somewhere here. If you wait for a couple of quarters, then you will find that the corporate results are not as rosy, as good as declared during last couple of quarters, and hence the valuations may appear very high. Despite the fact that the stock prices are low, valuations will become high because of the fall in the profitability. And uncertain future. When will this bottom come? No one knows. So there is a lot of uncertainty. So everything, whatever negative can go, will go. When all of the things are negative, then there will be a turnaround. But this is the part we all investors must learn, how to pass this phase, not only pass, but how to manage your portfolio during this phase. So what the investors do most of the time during this critical phase, there is a category of investors who get scared and they sell in desperation. There are investors who find that daily stock prices are moving down. Why not to sell now and buy at lower levels? But believe me, very few investors succeed in this game, and those who succeed is often because of luck and not because of their smartness. There are investors who are sitting on free cash and they are looking for attractive valuations to buy, but then check what is the size of your portfolio and how much cash you have. You find that the amount of cash you're holding with respect to the size of your portfolio is pretty small, maybe about 5% or at the most 10%. Also, there is a category of investors, though very small, who are always fully invested and look for opportunities to gradually replace low beta stocks with high beta stocks. And we at Smart VRC are of this category of investors. We are always fully invested. Why we are always fully invested? Because we know very well that we cannot predict. We do not have the expertise to find the future direction of the stock market in the immediate term. In the long term, we are very, very sure, we are very confident that the stocks we have selected the stocks we have advised are going to do well, not only well, but do very well. There are investors, of course, very old investors with good amount of experience, rather I should say with 20 to 25 years of experience or more than that, those who invest only in blue chips and they know very well that nothing to be done here at this stage of the stock market. They sit tight without any action. So these are the kind of investors, different kind of investors present and with in the present market, and what they do that we have covered. This is smart billionaire picks. As you all know, this is a part of our smart gains. This is how it has performed with respect to BSE Sensex for last 21 years. Yeah. And of course, with a fall in the BSE Sensex indicated by red color, or this smart billionaire picks has also fallen. As far as the percentage decline is concerned, it is almost same as with respect to the Sensex. Sensex has fallen by 15% from the peak, and SBP, that is smart billionaire picks, has also fallen by 15%. And this time we are very, very happy. I'm very, very happy, rather I should say, that fall is in line with the Sensex, because in the past, almost I can say all the time, whenever the Sensex falls more than 10%, SBP falls much more than the Sensex falls. Why? Because we are looking for the future. We are looking for 2 years, 3 years hence. Hence, we are always looking for stocks with good future potential. And stocks with good future potential come at bit higher valuations. And whenever the market falls, the stocks with high valuations fall first. So that is why I am very much satisfied, and rather I should say I am very happy with 15% fall with respect to the Sensex. So that is how we have performed. And why means what is the structure of SBP? You would be surprised to know that still we are holding 21% in small cap and 40% in mid cap. Even with such a 20% fall in Sensex, SBP is down by only, even with 15% fall in Sensex from the peak, SBP has fallen by only 15%, despite the fact that large caps are only 39%. The rest is mid cap and small cap. So now you can very well appreciate the quality of the stocks and how we have judiciously mixed the mid cap, small cap, and large cap into SBP. Sector weightage. So this is the sector weightage of different sectors in SBP. Highest one is occupied by IT, that is about 24%. Then we have 9.63% by infrastructure. Among the major ones, the rest are all small. Also chemicals, also we have 9.46%. Rest are all around below 7%. So it is, there are about 15 sectors in SBP. Coming to the stock type, 75% are growth stocks and rest are 25% are value stocks. So this was all about the SBP. Now taking a small pause and something about smart PRs. Our objective is to help investors create wealth from stocks smartly. And how we do that? By sharing knowledge and wisdom and providing advice. And this is done by various means like the website, mobile app, webinars like the present one, and the seminars, workshops, social media, and television. Regarding the seminars and workshops, yes, these are offline activities, and soon we are going to start these activities. Rather, I should say restart. So before COVID, it was only seminars and workshops. That is, the webinars got introduced during the COVID times only. We will continue with webinars, of course. Yes, we can help you become a smart investors through our stock advisory. We have the products like Smart Gains, Smart Multibagger, and Smart SIP. Then we have got Smart Insights Pro. These are a set of 15 to 20 small videos, each of about 18 minutes on various categories like financial freedom, equity research, portfolio management, and controlling emotions. Then I'm also an author of the book, Way to Billionaire. It is available in English and Hindi, English and Gujarati. And this can be purchased from our website. Website is smartvrc.com. Then we have got financial freedom calculators available free on our website. How we are different? We have a very small team, and we have a cumulative experience of 71 years. That is too big and very much required in stock advisory. We have the ability to find the worth of the stock with good accuracy. This only few can vouch. We are truly qualified, not only in terms of the experience, but also in terms of academic qualifications. Our advice is on a closed loop basis. What I mean to say here is every buy advice is supported with a sell advice. Also, we provide you the weightage and allocation. This is very much required because of this decides the returns, and those are applicable depending on the average risk return profile of an investor in case of our products. All advices are made during the market hours and at the ruling prices. And this is reflected in our performance of, to be precise, presently it is 25.72% in SBP from last 22 years. So we were discussing about this phase. This is the most critical phase, and passing this phase is a must, because if you try to skip this phase, which I know very well, with an experience of more than 30 years, I know very well there are investors who sell at this point of time, and then they will re-enter when the markets are much higher than this point. When the market makes a U-turn, then it goes up to this position, and then they will invest because they want a confidence, and their confidence comes when the market starts steady gains, when the market gains steadily for a reasonably good period of time. Then only they get the confidence. And that is exactly at the wrong time. So they must have entered somewhere here, and now they are exiting here. In future, they will enter somewhere here and exit here. Like this, they always keep making losses. And after a couple of such losses, they will totally exit from the market, saying that market is a pure speculation. Market is not a pure speculation for all the investors. For the smart investors, market gives an opportunity during this period only. So it is a smart game. Now, when I say we, means I am a small investor, and we are really very small investors, but we should not think that we are weak. We are strong, and that strength, that strong quality comes from the confidence you have in your stocks. So you are not weak. Gain confidence, and confidence comes from various activities, levels. To categorize, I should say experience. Experience is the most important factor in getting the confidence. As I said, I'll give you an example. There is a gentleman who is 15 years elder than me. Yeah, he is presently in his early 70s, and about 20 years back, I met him, and he asked about my strategy. I shared with him, and then I asked him what is his strategy. Then he said, I invest only in blue chip companies when the markets are down, and he has never sold any company stock. He invests only in blue chips, but when there is, in his words, there is a blood on the streets, when the investors are crying for the losses, that is the time when he looks into the market and invests. And then he forgets. And he waits for the next such phase. So that is experience. During his investment experience of more than 45 years, he has understood that the market has to go ultimately only in one direction, and that is up. And because he is not very much into the stock market, he is not very much involved into the research activities, so he is not investing in mid caps or small caps, but only in proven blue chips. And he is making good returns of about 19% CAG. That is pretty good. So that is experience. He has become seasoned. We are experienced. I've got experience of more than 30 years, and those who are into that level, they know very well that the market goes only in one direction in the long term, and that is up. It is only a matter of time. So that is how I am so confident, and I always remain so confident. Second is own research. If you are doing own research, if you are passionate about stock market investment, if you are confident about the companies you have invested, you are confident about the chief executive officer performance of the company, then you are very much confident, and you know very well that that stock, whatever you have invested, is going to move up, and you look for the opportunity to add more into such stocks. That is the level of confidence you have. Then advisor. If you are not investing on your own, and if you are dependent on your advisor, then you must have the confidence on your advisor. You must check the level of experience in terms of the number of years of giving advice and investment by your advisor. You must check the qualification, academic qualification also of your advisor. When I say academic, means does he understands the business? So that is the way to check for the confidence of the advisor, so that you have the confidence on your advisor. So this is how you gain the confidence, and confidence is very much required during this crucial phase. Coming to the smart word. This is a very good quote by Peter Lynch. If you are in the market, you have to know there is going to be declines. Of course, as I said, stock market is not meant to be moved only in one direction in the short term. In the short to medium term, there will be many ups and downs. But if you look from the very long term perspective, then you will find that most of the time market is moving up. And the second quote, again by Peter Lynch: people who exit the stock market to avoid a decline are odds-on favorites to miss the next rally. What I mean to say is, investors who think that they can exit now and buy later are definitely not going to participate in the next rally. But because what happens is, suppose you sell today, okay, you sell your total portfolio today, and after 10 days you find that the market is down by 4%. So you are very happy, you save the loss of 4%. Further, after 2 months, assume that the market is further down by 9%. So you are very happy that you have saved 13% loss into your portfolio. And then some great news comes and market suddenly jumps, and within a couple of sessions market is up by 15%. Now you are not going to buy. Yes, because the stock prices are up by 2% from the level you have sold, because you are not confident that this upside is going to continue. So because you don't have that capacity or capability to predict the markets, it was just by chance you gained by selling. So that is why consistently predicting the market is almost impossible. And one more, three smart words, first time in our webinar, and coincidentally again by Peter Lynch. When I ran Magellan Fund, the market had 9 declines of 10% or more in those 13 years. I had a perfect record. All 9 times my fund went down. That is यही एक कटु सत्य है. Don't think that if the market goes down, my stocks should stay at the same levels. It is not possible. And if it is possible, then if the market moves up, your stocks will also not move up, because the beta of your stock may be very, very low. So if you are an enterprising investor, definitely the beta of your stock would be about 1.2 or 1.5. And if the market falls down, your stocks will fall down much more than the market. But on the upside, the gains would be in multiples of the gains of the market. So this was all about the today's webinar. Those who want to join our journey, they can be a part of our WhatsApp groups. If you are not a part of our WhatsApp group, you can send me your name and city to this number. This is our WhatsApp number, that is 9755920780. Even you can ask your friends to join, and believe me, there is nothing to lose, only to gain. So we are heading towards question and answer session. Thank you very much. Yes, Mr. Arindam, kindly unmute yourself.
नमस्कार सर.
नमस्कार सर.
हाँ सर, मैं पहले जानना चाहता हूँ, आप स्टॉक सिलेक्शन का वक्त क्या आप टेक्निकल चार्ट फॉलो करते हैं, टेक्निकल एनालिसिस का यूज करते हैं?
ये एक बहुत ही सभी लोग यही सवाल पूछना चाहते हैं कि हम टेक्निकल एनालिसिस करते हैं कि नहीं करते हैं, और बहुत से लोगों को ऐसा सोचना है कि टेक्निकल एनालिसिस के बिना मार्केट में पैसा बनाना संभव नहीं है. तो मैं आपको ये बताना चाहूंगा कि हम लोग टेक्निकल चार्ट बिल्कुल भी फॉलो नहीं करते हैं, 0%. जब मैंने स्टॉक मार्केट में इन्वेस्टमेंट शुरू किया था 88-89 में, तब मैं टेक्निकल चार्ट्स यूज करता था, और उसके बाद 1991-92 में एक जबरदस्त क्रैश आया था, और वहां से लेके हमने हमारा जो सोच है मार्केट के प्रति वो पूरी चेंज हो गई. और वहां से मैंने पता किया कि कौन लोग हैं जिन्होंने रियली पैसा बनाया स्टॉक मार्केट. उस समय इंटरनेट नहीं था, और पढ़ने के बाद मुझे पता चला कि वारेन बफेट, पीटर लिंच, ये वो लोग हैं जिन्होंने बहुत पैसा बनाया स्टॉक मार्केट इन्वेस्टर्स के लिए. और उनका एक ही वे था, और वो ये था कि टू फाइंड द वर्थ ऑफ द स्टॉक. If you are not able to find the worth of the stock, then whatever you are doing is just by chance you are moving in dark. और यही कारण है कि अगर आप अपने आसपास देखेंगे कि जो लोग स्टॉक मार्केट में पिछले 25 साल या 30 साल से ज्यादा है, आपको शायद ही कोई ऐसा बंदा मिलेगा जो कि टेक्निकल चार्ट्स यूज करता है. ये मेरा सोच है. अदरवाइज आई डोंट हैव एनी. आप अगर टेक्निकल चार्ट यूज करते हैं, कोई भी, मैं सिर्फ आपकी बात नहीं कर रहा हूँ, मुझे किसी से कोई परेशानी नहीं है. इफ यू आर एबल टू मेक गुड अमाउंट ऑफ मनी बाय यूजिंग टेक्निकल चार्ट्स, इट्स अप टू यू, यू कैन कंटिन्यू विद दैट.
ओके. और सर मेरा एक रिक्वेस्ट था, आपका जो पीई वैल्यूएशन का ऊपर एक जो वर्कशॉप में देख रहा था आपका वेबसाइट पे रिगार्डिंग वैल्यूएशन, वो मैं सर अटेंड करना चाहता हूँ. उसका कोई अगर ऑनलाइन वर्जन आप कराएंगे तो बहुत अच्छा होगा. मैं तो कोलकाता से हूँ, तो उसमें सर मैं पार्टिसिपेट कर पाऊंगा उसमें.
अच्छा, आप हमारे व्हाट्सएप ग्रुप में हैं सर?
नहीं सर, मैं आज ही ऐड हो जाता हूँ, आपको रिक्वेस्ट भेज दूंगा.
हाँ, आप मेरे को आपका नाम और आपको मोबाइल नंबर व्हाट्सएप कर दीजिए. आपको जब भी हम ऑर्गेनाइज करेंगे, मे बी इन द मंथ ऑफ अगस्त, वी आर प्लानिंग. एक पी वैल्यूएशन पे नहीं रहेगा, एक थोड़ा सा डिफरेंस रहेगा, लेकिन वो भी हम कवर करेंगे उसमें पी वैल्यूएशन पे.
ओके. थैंक यू सर, थैंक यू वेरी मच.
थैंक्स. यस, मिस्टर कौशिक. यस सर.
सर गुड इवनिंग.
गुड इवनिंग.
How are you doing, sir?
Yeah, I'm doing well, fine.
Yeah, thanks a lot for guiding us, and thanks for everyone, and good evening to everyone. My question is that I know actually you are proven things, and I'm following you for the last 5 years without any doubt, and I have full confidence in you. But when I go through your Smart Billionaire package graph, sir, when you have started the things on 2000 to 2022 right now, from 2000 to 2014, if we see that specific period, there are some positive and negatives, obviously, which is as per the cycle. But आपका जो पहले वाला जो था, आपने बोला था हम लोग 1 लाख रुपए को 1 करोड़ करेंगे 20 साल में. And your next thing is that 1 करोड़ को 100 करोड़ करेंगे in the next 20 years. That is your aim, and we also believe in you, sir. Absolutely, there's no doubt about it. But when I see from 2000 to 2014, with respect to inflation and everything, पूरा का पूरा मार्केट में S&P में देखिए, निफ्टी में देखिए, या तो हमारा जो नॉर्मल स्मार्ट बिलियनर पैकेज भी है, the compounding growth is not that much, which is there post 2014. Any reason for it, sir? Just I want to know from the knowledge part of the things.
Okay. There may be periods of time when the stock market moves up substantially, and there will be periods of time when the stock market is stagnant. After 1991-92 crash, during the peak of 1991, when Dr. Manmohan Singh presented his budget, revolutionary budget, rather I should say, at that time Sensex went up to, I think, about 4,300 levels, and after that it took 7 years to get back to those levels. So for 7 years, if you compare with the peak of 91, then for next 7 years there was literally zero growth. But if you compare the Sensex from the start, that is from, I think, 1976 to till date, the returns are about 14.5 or 15% compound returns. And most of the time, if you look in the periods of 10 years, then you will find that the average returns are about 14.5 to 15%. So we believe, even in Smart Billionaire, in the case of Smart Billionaire picks, we started on 30th of May 2001. And during these 21 years, the Sensex has grown at the rate of 14.3%, and our growth is about 25.7%. So everything is covered. Means 20 years, 21 years is a pretty long period. So if Sensex has grown by 14%, we have grown by 26%. That is pretty good. And in the stock market, there is no guarantee. There is no guarantee. As I said, for a long period of 6 to 7 years, there was no growth. Similarly, after 2013-14, yes, markets have gone up. And also new kind of stocks, new kind of companies have come, which have grown up substantially. I remember very much when I entered the market, there were stocks like Colgate, Hindustan Unilever, and many more, wherein every 3 to 4 years, they will declare 1:2 or 1:1 bonus. But now that is not the case, because new companies have come and those sectors have pretty saturated. The rate of growth of FMCG sector is now not that high as it used to happen in those times, and there were limited stocks in those times, and now there are very large number of companies which are into the niche segments, new segments. So definitely that is one of the reasons why the growth is high. Also, after 2013-14, as I said, the market has, the valuations have gone up, and that is why the stock prices have also gone up in a better fashion compared to previous period. That is not in our control. What is in our control is the selection of the stocks in our portfolio. That is the key thing. You have to have the best of the best 16 to 18 years stories in your portfolio. That is the best you can do. You cannot predict about the market you cannot do anything about the market. So that is my submission. Okay. Downfall is temporary, but growth is permanent. Right? In the long term, yes, whatever downfall you are seeing today of 15%, I am very sure 10 years or 15 years hence, you would not be able to highlight where was this fall in the market. So any other query? Even in the chat box, there is no query. And okay, Mr. Mohit says there. Yes, sir. Unmute yourself.
Good evening, sir.
Good evening.
Thank you so much for such a nice presentation.
Thank you.
Sir, just one query I had.
Yeah.
As we know that we are in now interest rate rising cycle.
Yeah.
So just want to understand what impact this would have on the banking sector. I mean, would this help in improving the bank's profits, or it will, say, reduce their profits?
See, if there is a gradual increase in interest rates, then it is good for the banks, and banks make good profits in the rising interest rate cycle. But if there is a sudden increase, then there can be a trouble. But most of the corporate sector is in a very comfortable position. They are not in a very high debt situation. So there is no chance of any NPS, increase in NPS from the corporate sector, as well as even from the retail side. It is not that the people are highly debted. So downfall is, I see a limited downfall, even in case of sharp increase in interest rates.
So in the current scenario, it is going to be positive for banks, right?
Yes, yes. But always, as I say, not all banks would be able to report the same increase in profits. There will be selected banks which are better placed, and mostly those are from the public sector, private sector.
Right, sir. Okay. Thank you so much, sir.
Thank you. Yes, Mr. Ashish Diwan. Yes, sir.
Yeah, hi, sir. Hi.
Hello.
My question is, like, which sectors you think that there will be tailwinds now? Which sectors you think that will be promising right now in the current scenario?
Okay. At Smart VRC, we follow bottoms up approach. When I say bottoms up, so first is the stock, first is the company, then is the sector, and then the industry. The economy. So we are very much solely concerned with the company performance. We are not much concerned with the sector, but nevertheless, by analyzing so many companies, we do come to the conclusion that which sectors are going to perform well. So in the present scenario, we feel that selected pharma companies, chemical sector, automobile, especially auto ancillaries, and these are the sectors which we believe should do well. Of course, the companies which are engaged in niche segments, and especially from the technology sector in India, I believe these sectors offer exceptionally good potential to grow in years to come.
The niche sectors in technology.
There are, during last 2-3 years, many IPOs have come. Many companies, not I should say many, but there are fairly good number of companies in the technology sector which have tapped the market via IPO during last 2-3 years, and they offer very good potential for upside. They have got very good order book and they are growing pretty fast.
Sir, but your SVP allocation in pharma is quite low. Like,
yeah, we have got range of products, and it is not necessary that everything should be in SVP. SVP is for an investor with an average risk return profile. So that is why we have very low exposure to pharma sector. And as I said, there are not all pharma companies are going to do well. select pharma companies, I said.
Okay, and sir, if the market further falls,
Hmm.
which most likely it will be, but we cannot predict,
Yeah.
then again these same sectors would be considered.
Yeah, because ultimately, what decides the movement of your stocks is based on the performance of the company. So, assuming that the slowdown continues for 1 year, just assuming, then
Yeah.
what will happen? Because of the increase in interest rates, because of the increase in inflation, the performance of the overall corporate sector will not be good after 1 year. But the companies which are engaged in niche segments, the companies which have huge order books, they will continue to do well. And that will decide the returns of your total portfolio. Then after 1 year, the performance of your portfolio may not be that much linked with the market. Presently, it is very much linked.
Yeah.
So ultimately, it is the performance, financial performance, the results of your company that will decide the total returns of your portfolio.
Yeah.
Yeah. Okay.
Yeah. Yeah. Thank you.
Thank you. Yes, Mr. Jayesh.
हाँ सर नमस्कार गुड इवनिंग
Namaskar. Good evening. बोलिए.
सर अभी जैसे यूक्रेन और रशिया की जो लड़ाई चल रही है 120 दिन से ऊपर हो गए हैं है ना दूसरा क्रूड प्राइस जो अभी अनकंट्रोल्ड वे में बिहेव कर रही है गवर्नमेंट इज समहाउ मैनेजिंग बाय ऑल अदर measures to control the price and they are somehow they are able to maintain the stabilization but it is not sustainable. It seems कि जो whatever factors are dependent on petroleum directly or indirectly, every entire economy is depending on petroleum. Okay, so अभी इसका हमारे जो इस पे क्या इम्पैक्ट पड़ने वाला है गोइंग फॉरवर्ड क्योंकि 120 दिन हो गए जंग खत्म नहीं हो रही है एंड इट्स प्रोलॉन्ग लाइक और मार्केट ने इसको एब्जॉर्ब तो किया है काफी हद तक बट कब तक इसको झेल पाएगा गोइंग फॉरवर्ड हम लोग मतलब कैसे इसको फोर्सी करें कि ये पेट्रोलियम प्राइस हमारी इकोनॉमी को बहुत ही एडवर्सली अफेक्ट कर रही है तो इसका मार्केट में भी अपने कोई इम्पैक्ट अपन देख रहे हैं और जो अपन ने अपना जो साइकिल समझाया है हमको जो डाउनफॉल साइड जा रहा है जहाँ पे लर्निंग की जरूरत है तो हम इससे कैसे मतलब हाउ डू वी एज इन्वेस्टर टेक इट एंड व्हाट अपॉर्चुनिटीज डू वी हैव फर्दर इन दिस
ओके जब रशिया यूक्रेन वॉर स्टार्ट हुआ था तो एवरी डे rather I should say कि in multiple times every day we used to switch on the television, we used to watch for the social media या न्यूज में कि what is happening, अभी क्या हुआ, यूक्रेन के प्रेसिडेंट ने क्या कहा, रशिया के प्रेसिडेंट ने क्या कहा, इस सब में हमको बहुत इंटरेस्ट था क्योंकि हमारे स्टॉक मार्केट का जो मूवमेंट है वो उसके साथ बहुत ज्यादा अलाइन था. ओवर ए पीरियड ऑफ टाइम नाउ वी आर हार्डली कंसर्न, हम शायद ही उसको हम सुनते हैं और कोई मेजर न्यूज होती है तो अपने आप हमारे पास आती है लेकिन हम अपने साथ हम इंटेंशनली जाके वी नेवर सर्च फॉर व्हाट इज हैपनिंग इन रशिया यूक्रेन. व्हाई? क्योंकि वो एक रूटीन बन गया है. नाउ व्हाट हैपेंस इज ये पूरे इन दिस टोटल वर्ल्ड देयर इज ऑलवेज it always try to achieve equilibrium. So due to this war, if there is an disruption in terms of say suppose यूक्रेन जो है wheat export करता है किसी कंट्री को और अभी ये वार के कारण उसमें इंटरप्शन आ गया, what will happen? That country which used to import wheat from Ukraine, they will search for some other country. They will try to find out the solution. And if they suppose India exports, just assume India exports the wheat, then what will happen? The wheat prices will rise. Indian farmers will get an opportunity to encash the increase in prices in wheat. They will cultivate more wheat. So if this war continues for 1 year, then automatically the disruptions because of this war will slowly get dissolved. The countries will find the solution. So temporarily, yes, there will be an impact, but if it prolongs for couple of years, if we assume that, then the impact of this war will be minimal on the worldwide economies. Regarding the crude, it is again the same thing. If the crude goes on increasing, crude price goes on increasing, definitely there will be a slowdown in the consumption. People will find the alternate ways. Instead of crude, if we can, as the India is going for 20% mix of ethanol, other countries may also opt for alternates, or they will tap their reserves also. India also has good amount of reserves in crude. So what India is doing, India is trying to import more and more crude from Russia. What I mean to say is कि जब भी कोई ऐसी कोई अनहोनी होती है, तो हम कुछ उसके सॉल्यूशंस फाइंड आउट करने की कोशिश करते हैं और सॉल्यूशंस मिल भी जाते हैं, बट इट टेक्स टाइम. तो उस दौरान लॉस होता है, थोड़ा सा लॉस जरूर होता है. एंड इंडिया इज ऑल्सो टेकिंग द एक्शंस. आपने भी देखा होगा कि इंपोर्ट को कम करने के लिए गवर्नमेंट कुछ ड्यूटीज बढ़ा रही है, गोल्ड के ऊपर ड्यूटी बढ़ाई है. तो गवर्नमेंट विल टेक नेसेसरी एक्शन एंड अदर कंट्रीज विल आल्सो टेक एक्शंस. And moreover, these all are external things. We don't have a control. What we have a control is how that rise in crude prices will impact my company's performance. That should be your concern. I hope I answered your query. Jayesh?
Yeah, sir. Very much, sir. And thank you. So, the crux is that we need to, हमें बने रहना है. Crux is that हमें बने रहना है और अपने जो हॉर्सेस बोलते हैं, जो आपने 17-18 हॉर्सेस दिए हैं, उन सब हॉर्सेस पे ट्रस्ट रखना है और बने रहना है और इसका राइड का अप एंड डाउन का मजा लेना है.
हाँ, बिल्कुल बिल्कुल, आपको एंजॉय करना है वो.
राइट.
इफ यू कैन लाफ लाउडली, दिल से, मैं दिल से बात कर रहा हूँ, सिर्फ दिखाने के लिए नहीं, then I can say that yes, you will make tons of profits in times to come.
Yeah, and every drop is opportunity to add new.
Yeah, as far as buying is concerned, I am very clear and I keep on repeating. If the stock price of any of your companies in your portfolio is down by about 15% or 20% from your last purchase price, you can always add if you have the money. And if you don't have the extra money, then you can even sell some other stocks from your portfolio which has not fallen to that extent. But this should be a gradual process. आप suddenly मत करिएगा उसको. And that is why we are here. हम आपको बिल्कुल गाइड करेंगे कि कब करना है.
जी. तो वेटेज का ध्यान रखना है सर, जहाँ पे कोई स्टॉक, some stock has fallen by 3% and other has fallen by 17%. तो 3 वाले में some percentage वेटेज कम करके हम जो 17% गिरा है उसमें हम ऐड करते हैं. ऐसे हम अर्निंग कर सकते हैं 1 महीने में एक बार या 15 दिन में एक बार, जब ऐसी अपॉर्चुनिटी आए तब.
Yes, exactly.
Right. Thank you very much, sir.
Thank you.
And very impressed by the way you guide us and you coach us. Thank you. Thanks a lot, sir.
Thanks. I am very happy आपने उस चीज को बहुत अच्छे से समझ लिया. And that is the way to success in stock market.
Thank you.
Okay, there is one query in the chat box. Any plans for introducing new basket of stocks? Okay. If you ask me to prepare a new basket of stocks, then believe me, I'm going to start with the same set of stocks what I'm already holding. So there is no point in starting a new stocks. Whatever stocks we have advised are good stocks even at current price. हर स्टॉक को आज की डेट में आप उसको evaluate करिए. Is it worth buying that stock today? If the honest answer comes from your heart is yes, then you hold that stock. And if you think that it is not worthwhile to buy that stock at the current price, then it is time to sell and buy some other stock. At current scenario, is it better to invest in real estate stocks? There are a limited number of real estate companies which are doing pretty well, and these are the Brigade Enterprises and Godrej Properties, Sobha Developers. These are few good companies from the real estate. But over a period of time, what I have observed, predicting their profitability is very, very difficult. So instead of betting on the real estate companies, you can select companies which are dependent on real estate, not directly but indirectly. What I mean to say is like companies engaged in paints, companies engaged in cement, companies engaged in wood, or you can say artificial wood or panels like that. That would be a better provision. Like in automobiles, I am more comfortable with auto ancillaries rather than the OEMs, because auto ancillaries have much more scope to grow, and much higher rate of growth is possible in auto ancillaries because they have got a large number of customers. And that is the reason why over a long term, you will find that the returns given by some auto ancillaries are much, much higher than the auto OEMs, and same holds true for other sectors also. So with this, we come to the end of the session. Thank you very much. See you next time. Bye-bye.